Investing isn't just for Wall Street bros. It's literally buying assets that grow in value over time. The secret? Start early and stay consistent. You've got options. Stocks give you partial ownership in companies. Bonds let you become the bank by lending money. Commodities like gold can hedge against inflation. And property? Well, 20% of Aussies already own investment properties. The key is understanding risk. Higher risk can mean bigger returns, but also bigger losses. Lower risk means slower growth, but more stability. Your age matters too. Younger investors can afford more risk since they have decades to recover from market dips. Diversification is your best friend. Don't put all your eggs in one basket. Spread your money across different investments so when one goes down, others might go up. Ready to start? You've got options. Robo-advisors automatically invest for you based on your goals. Online brokerages let you pick your own investments. Or financial advisors provide personalized guidance if you prefer the human touch. The ASX has delivered average annual returns of about 13% since 1900, despite recessions and market crashes. But remember, investing is a marathon, not a sprint. Don't panic when markets drop. Some of the biggest market gains have followed days of large losses. And whatever you do, invest regularly. When you consistently put money in, you naturally buy more shares when prices are low and fewer when they're high. Your future self will thank you for starting today.